The market is the rate that the market has, is Treasury markets, right? And then the Fed has where they are. And there's this big delta between the two. So there's probably going to be pressure on the Federal Reserve to get back to where the market is, which is 200 basis points away.
It is. There's been a lot of people talking about how, is there this Fed put? The idea that if the markets sell off, that the Federal Reserve steps in and they try to save the day. And I think that there's some evidence to suggest, we saw it with Alan Greenspan, we saw it with Ben Bernanke, we saw it with even Chair Powell. So you had the tech bubble bursting, you had the global financial crisis, you had COVID. The Federal Reserve does come in, but generally, the Fed, they look at those market prices and view them as information. So it's not as though the market is forcing them to do something. I think it's more like the Fed recognizes that they don't have all the answers and they do need to move in the direction that the markets are moving. There's that 2 percentage point difference between what the market is saying where they should be and where the Fed is saying that they think they're headed.
Well, the Fed, I've always argued, is fighting last year's war, right?
Absolutely.
They're not fighting what's in front of them. Markets generally react to a rate cut, and people go, well, lowering rates is generally good for the economy, but we've have some evidence to the contrary.
That's right. You get what's called this J-curve effect oftentimes, where if you kind of think about it, it makes sense. If the Federal Reserve cuts rates, that means that the amount of income that you get from high-yield savings accounts, money market accounts, those come down right away. That's a lot of the economic growth that we have seen over the last year and a half has been driven by people with net savings, meaning that they don't have a lot of debt that they need to take on or that they need to refinance. And so if their income goes down even just a little bit, what will that do to their consumption? Now, the time that it takes for people to refinance, take on new debt, that takes time. So you could actually see after the rate cut, you continue to see a little bit of that economic momentum with slowing growth before it finally gets some traction, and then you see the acceleration.